It's Q2 earnings season, and we've got the biggest names dropping blockbuster results. These are the stocks everyone wants, and you'll want them in your portfolio too. From tech giants to market movers, these earnings are packed with surprises, momentum, and long-term upside. Let's break down what just happened and why it matters for your next big play. The first earnings we have is of Microsoft. Today, we're diving into Microsoft's Q4 fiscal year 2025 earnings, and let me tell you, the numbers are very strong. Whether you're new to investing or just want to better understand what these results mean for your portfolio, stick around because I'm going to break it all down for you. Let's start with the headline numbers. Microsoft reported $76.4 billion in revenue for the quarter ending June 30th, 2025, which is an 18% increase compared to the same quarter last year. That's a massive jump for a company already operating at such a large scale. Operating income came in at $34.3 billion, up 23%, showing they're not just growing, they're becoming more profitable while doing it. Net income, which is Microsoft's final profit after all expenses, reached $27.2 billion, also up 24%. Earnings per share, or EPS, came in at $3.65, a 24% increase. This is a key number for shareholders because it reflects the earnings tied to each individual share. Seeing these consistent gains across revenue, profits, and EPS signals a well-run, highly efficient company. Now let's talk about what's powering this growth. Cloud and AI. Azure, Microsoft's cloud platform, crossed $75 billion in annual revenue, growing 34% year over year. That's huge. For context, Azure is now firmly in competition with Amazon Web Services and ahead of Google Cloud in several areas. Microsoft Cloud overall brought in $46.7 billion this quarter, a 27% jump. This part of the business is highly valuable because it's recurring, high margin, and deeply integrated into customers' operations. Microsoft isn't just participating in the AI revolution, they're building the infrastructure behind it. Let's dig into the business segments that contributed to this performance. Revenue in their Productivity and Business Processes division hit $33.1 billion, growing 16%. This includes Microsoft 365, LinkedIn, and Dynamics. Microsoft 365 commercial products grew 16%, with the cloud segment rising 18%. That tells us businesses are continuing to rely on Microsoft tools like Teams, Excel, and Outlook, especially as AI features like Copilot are added. On the consumer side, Microsoft 365 saw a 21% revenue increase. That's a clear signal that even individual users are subscribing for productivity and cloud storage. LinkedIn saw a 9% revenue boost, which is slower than other areas, likely because hiring trends are soft, but engagement on the platform remains strong. Meanwhile, Dynamics 365, which offers business software solutions, jumped 23%, showing that Microsoft is gaining traction in the CRM and ERP markets, challenging big players like Salesforce. So, what does all this mean if you're an investor? First, Microsoft's growth isn't coming from one place. It's happening across cloud, consumer, enterprise, and software. That's a sign of a well-diversified business. Second, AI is already generating real revenue. This isn't some futuristic bet. Microsoft is earning billions from AI-powered products and services right now. Third, they're managing their costs wisely, with operating income growing faster than revenue, which means better margins. And finally, Microsoft's competitive edge is only getting stronger. Between Azure, Office, Windows, LinkedIn, and GitHub, their ecosystem is sticky, trusted, and difficult for competitors to break into. To sum it all up, Microsoft just ended its fiscal year with record-setting numbers. Revenue is climbing, profits are surging, and they've got a clear lead in the cloud and AI race. For long-term investors, Microsoft continues to look like one of the most stable and innovative companies in the market today. Let me know in the comments, are you holding Microsoft stock? What stood out to you in this report? If this breakdown helped you understand the earnings better, make sure to like the video and subscribe. Let's see how this earnings impacted Microsoft. Microsoft's earnings this week made waves on Wall Street, and the stock responded fast. After releasing its Q4 fiscal 2025 results, Microsoft shares jumped nearly 9% in a single day by reaching almost $555. by the end of the week closing at $524.11. In just 5 days, the stock has added over $10, driven by investor excitement around strong financials, revenue up 18%, EPS up 24%, and massive growth in cloud and AI. Azure alone grew 34%, and Microsoft Cloud pulled in $46.7 billion in the quarter. These results reassured investors that Microsoft isn't just riding the AI hype, it's monetizing it effectively. Now looking at the bigger picture. Microsoft is up 6.72% over the past month, adding $33 per share. The stock steadily climbed from around $491 in early July to a post-earnings peak above $530. This sustained upward trend shows that investor confidence has been building even before the earnings drop, likely on expectations that Microsoft would deliver strong numbers. Microsoft, ticker symbol MSFT, continues to prove why it's one of the most reliable long-term investments in the market. Year to date, the stock is up 24.82%, handily beating the S&P 500's 6.06% return. Over the past year, it gained 26.62% versus the S&P's 14.53%, showing consistent outperformance even in uncertain markets. The 3-year return is even more impressive. Microsoft is up 93.30%, nearly doubling investors' money and far ahead of the S&P's 51.46%. And over 5 years, Microsoft has delivered a staggering 166.84% compared to 90.70% for the index. This level of sustained growth comes from Microsoft's dominance in cloud, AI, enterprise software, and its deeply integrated recurring revenue model. Whether you're a new investor or looking to strengthen your core portfolio, one thing is clear: MSFT is an evergreen stock. You can buy it anytime. Next we have is Meta. Meta's earnings are out and the stock is absolutely skyrocketing. As of this morning, Meta Platforms Inc. is trading at $779.58, up nearly 9% overnight. That's a massive jump of over $85 overnight. Investors are cheering, and Wall Street is clearly impressed. But what's really driving this sudden surge? It's not just market hype. The company just posted an outstanding second quarter earnings report that's turning heads across the financial world. Let's break down exactly what Meta delivered and why the market is reacting so positively. In the second quarter of 2025, Meta reported total revenue of $47.52 billion, a 22% increase compared to the same period last year. That's not a small leap, especially at this scale. Even more impressive, income from operations jumped 38% to $20.44 billion. This means the company isn't just bringing in more money, it's also becoming more efficient and more profitable. Operating margins increased significantly from 38% to 43%, and net income rose to $18.34 billion, a 36% gain year over year. The earnings per share, one of the most watched metrics on Wall Street, shot up to $7.14 from $5.16. That's a 38% increase. Every line item in the income statement is moving in the right direction. But earnings aren't just about numbers. They reflect what's happening inside the business. Meta's user base continues to grow. The company reported that daily active people across its family of apps, including Facebook, Instagram, and WhatsApp, averaged 3.48 billion in June of 25, up 6% from last year. That's nearly half the planet using a Meta service every day. On the advertising side, things are looking even better. Ad impressions rose by 11%, and the average price per ad increased by 9%. That's double-digit growth on both volume and pricing, a dream scenario for any ad-driven platform. Meta is also reinvesting heavily in its future. Capital expenditures came in at $17.01 billion this quarter, largely going toward infrastructure, data centers, and AI development. That's a clear signal that Meta is doubling down on long-term innovation. Meanwhile, The company returned capital to shareholders with $9.76 billion in stock buybacks and paid out $1.33 billion in dividends. On top of that, Meta's balance sheet remains incredibly strong, with $47.07 billion in cash, cash equivalents, and marketable securities. Free cash flow alone was $8.55 billion this quarter, a testament to how well this business is running. When a company grows earnings, invests in the future, and still has billions in cash, it's showing real long-term strength. So let's recap what we have analyzed till now. Meta delivered a strong Q2 2025, reporting $47.52 billion in revenue, a 22% increase year-over-year. Operating income surged 38% to $20.44 billion, with margins improving to 43%. Net income reached $18.34 billion, while EPS jumped 38% to $7.14. Daily active users hit 3.48 billion. Ad impressions rose 11%, and ad pricing increased 9%. The company reinvested $17.01 billion in infrastructure and AI, while also returning $11.09 billion to shareholders through buybacks and dividends. With $47.07 billion in cash and $8.55 billion in free cash flow, Meta's fundamentals are strong and forward-focused.